Should you invest in Bitcoin mining companies, such as the new Bitcoin company, American Bitcoin, that launched like this week, maybe? I don't know. But anyway, it's got um, Eric Trump and Donald Trump Jr. as, I think, strategic advisors. I don't know what their role is. The answer for all of this, Bitcoin treasury companies and Bitcoin miners, is no. And I'm going to tell you why I think that. Okay, first of all, Bitcoin miners. Bitcoin mining is a brutal business to be in. The number one input that matters is the cost of electricity. And so it's essentially a race to find the cheapest electricity anywhere in the world. And anybody who's got cheaper electricity than you do and can still get Bitcoin mining equipment and run an operation is going to undercut you on price, and they're going to end up mining more Bitcoin than you do, which pushes you into a loss, which is the way any industry works. You know, the grocery store business is a brutally competitive business. So there's nothing magical about the Bitcoin mining business other than, of course, like any commodity, gold, silver, copper, soybean, wheat, corn, rice. There's always a buyer. Like if you have a commodity product, there's always a buyer at the market rate. The problem is it's very hard to produce at below the market rate, which is why any commodity business is, hard to be in. So Bitcoin mining is an especially difficult business because you're in basically a global race. So you're competing with literally everyone on the planet to try to get cheaper electricity than you. And as soon as you think you've got some amazing deal for 4 cents per kilowatt hour off some, nuclear power plant, somebody's mining off of flare gases at an oil rig and getting paid to do it to take the methane out of the air. It's just a brutal business. So I do not recommend investing in any Bitcoin mining companies for anybody. That is not to say that one or two of them, I mean, it's certainly hypothetically possible that one or two of them outperforms Bitcoin on some short time frame, just like it's hypothetically possible that any random company that's a Silicon Valley technology startup could outperform Bitcoin in the near term. But picking the winners and losers is almost impossible. And the Bitcoin mining industry in general is a brutally competitive business. So I do not recommend it. It doesn't matter if the company has two sons of a sitting president on their board or employees, or I don't know what role they play, but I would not invest in a Bitcoin mining company at all. Okay, so let's talk about Bitcoin treasury companies. The largest Bitcoin treasury company in the world is the company called MicroStrategy that had changed its name recently to just Strategy, just the word strategy. It is founded and headed by Michael Saylor. Michael Saylor is a genius. He has probably read more about everything that involves Bitcoin than anyone else on the planet. He is an engineer. He went to MIT. The guy's a freaking genius. Like, I'm a huge fan of Michael Saylor. Basically, everybody in the world of Bitcoin is a huge fan of Michael Saylor. So what did he figure out how to do? Well, he figured out that you can borrow money. One second. Actually, he figured out two things. One, you can issue more stock of your own publicly traded company because it's a publicly traded company. You can issue more stock of your own company and buy Bitcoin with it, and that will make your stock price go up because Bitcoin is outperforming the price of your stock. And then you can use the newly higher stock price to issue even more shares to buy Bitcoin. So he basically started what's called an infinite money glitch, which is the ability to issue stock and borrow money below the value of what you can acquire. So whether he's issuing his own stock at a price that is above the value of the Bitcoin that they're sitting on. So, for example, right now they're sitting on 70. I'm using round numbers here. $70 billion, $70 billion of Bitcoin, and their stock is trading at $100 billion. So let's call it's trading 40% higher than their Bitcoin holdings. Well, that means any additional shares you issue and you buy Bitcoin with them, you're making the company more valuable because the stock price is trading higher than the Bitcoin you own. And therefore, if you sell a share for $100 or $400, and then you turn around and buy $500 worth of or $400 worth of Bitcoin with it, but it only dilutes your ownership $300, it's sort of an infinite money glitch. Now, there's a problem with this, which is that it works great until it doesn't, which is the same with every great investment that ends up losing a ton of people money. which is that they work great until they don't. So in the case of Michael Saylor, he can only issue more stock to buy back his. That doesn't work anymore because you're basically doing it in reverse and it's not working. Additionally, Michael Saylor is borrowing huge amounts of money. I think he's borrowed like $9 billion at really cheap interest rates to buy more Bitcoin. And the logic, of course, is hey, if I pay a really low interest rate to borrow fiat currency, US dollars, from the economy. So if Michael Saylor borrows cheap money with cheap debt from the economy and turns around and buys Bitcoin, and then the Bitcoin grows faster than the interest payments on the debt, then he's basically making his shareholders richer, and which is great. The problem, again, is that works great until it doesn't. That is dependent on people willing to give him money to buy Bitcoin instead of people buying Bitcoin themselves. Well, in my opinion, the smart money is buying Bitcoin directly instead of buying stock in a company that's buying Bitcoin indirectly. So why wouldn't you just own the Bitcoin and hold it yourself instead of this roundabout way of holding it through another company? Now, hypothetically, he can borrow money so cheaply and he can issue so much of its stock that it results in the amount of Bitcoin owned per share going up over time, which in the last 2.5 years has worked really well. For 2023, 2024, and half of 2025, that strategy has been working great for him. But for a period of time in 2022, the company's value was trading below NAV, which means it was super hard to borrow money and it was super hard to issue more stock. So, and in the long term, as James Check often talks about, the gravitational pull on any of these treasury companies is toward an MNAV of 1. So right now, I don't know what the MNAV on MicroStrategy is. The ticker symbol on the stock market is MSTR. Let's assume it's 1.5. It's like, okay, but if you buy it at a 1.5 MNAV and it goes up to 2, well, then you're outperforming Bitcoin because the value of the company is increasing faster than the price of Bitcoin. But if the gravitational pull is toward 1, you end up losing money because even though Bitcoin increases in value over time, the value of MicroStrategy is losing value faster than the Bitcoin is gaining value. Therefore, you would have been better off in Bitcoin. Uh, Michael Saylor is pretty upfront, and he's like, look, buying MicroStrategy stock is like a 2x leverage on Bitcoin, which means in the good times, it'll probably go up twice as much as Bitcoin. But in the bad times, it'll probably go down twice as fast. So in the problem with that, of course, I mean, it's not going to go to absolute zero, but the way that things tend to work that are leveraged is when the price goes up 50%, the price of the double thing goes up 100%. But if it goes down 50%, the price of the other thing goes to zero. And obviously, if something goes to zero, it doesn't matter what multiple of percentages you apply to it, it's never coming back. Now, MicroStrategy doesn't exactly work that way because they're not going to go to zero unless they can't pay, their debt payments, but they are, $9 billion in debt. Now they own $70 billion Bitcoin, so they should be fine because they have a huge amount of Bitcoin as compared to their debt. But they do have a bunch of debt that they do have to pay off or they go bankrupt. So it's just a much riskier bet. So I think the upside of Bitcoin is big enough already that there's no reason to massively amplify your risk to try to get more upside. And I think Bitcoin mining companies, including American Bitcoin, are generally just a horrible investment that the average person should not even entertain. And of any of the Bitcoin treasury companies, the only one I would even consider touching would be MicroStrategy because they're huge and because the amount of Bitcoin they own as compared to their debt is massive and because Michael Saylor's a genius. But, who knows? Michael Saylor could get hit by a bus and, someone else could take over control of the company and decide to dump all the Bitcoin and screw the whole thing up. There's just risk. It's called key man risk or key woman risk when you've got a lot of your eggs in the basket of one person. And with Bitcoin, you don't have to worry about that because there's nobody in charge of Bitcoin. It's, governed by everybody and nobody simultaneously, just like the internet. And you're not dependent on one person getting hit by a bus or something like that. So my recommendation is buy Bitcoin, keep it on a BitKey, which is the cold storage device that keeps the hackers and the scammers from getting it. And just buy as much Bitcoin as you can. Hold on to it for as long as conceivably possible and just ignore the Bitcoin treasury companies, ignore the Bitcoin miners, just buy as much Bitcoin as you can, especially right now. Prices are cheap. The high was 124,000. We're trading at 108,000 right now. That's a pretty big discount. I would just buy as much Bitcoin as I could, sit on it for as long as conceivably possible, and you're not opening up yourself to all the insane risks of a Bitcoin treasury company or a Bitcoin miner or hybrid blends of the two, which there's some of those floating around as well. Thanks.